We IITians have always been at the forefront of technology. But what about those who are actually pushing those barriers, those frontiers, to see what's possible next? Our next moderator, Sudeep Chakrabarti, is a partner at Lightspeed Venture Partners, focused on enterprise infrastructure software investments. Prior to joining Lightspeed, Sudeep was a partner at Andreessen Horowitz. He started his venture career at Osage University Partners from IIT Kharagpur. Sudeep also has a PhD in computer engineering from Georgia Tech and an MBA from Wharton. Please join me in welcoming our next moderator, Sudeep Chakrabarti.
Thank you so much, Sharat. All right. First of all, I'm glad that this is not Sunday and we are not competing with the match tomorrow, because I won't be here, frankly.
And Father's Day.
And Father's Day, of course. Yeah, how could I forget? But yeah, thanks for coming and joining this panel. We have a great speaker lineup. From the very end, we have Naren Gupta, Anand Rajaraman, Kitu Kaluri, and Aparna. I'll just say Aparna C. How about that? So, the topic of the panel is investing in frontier technologies. So I'm going to ask, our speakers, what about, some of the areas that they are excited about investing in or, building companies, for the next 3 to 5 years. So I'll let them do the heavy lifting. I'll just be the pretty face on the panel. So maybe, we can start with a minute-long introduction, and if you don't mind, be sure to mention your IIT campus, most importantly, because I think we are minority, you and I, on this panel.
So, yeah, I am from IIT Delhi at Nexus Venture Partners. We invest in India and we invest in the US, do a lot of cross-border investments, both to serve the Indian market. The companies we fund serve the Indian market, as well as global markets.
I'm Anand Rajaraman, IIT Madras class of 93. And I run a venture capital firm called rocketship.vc. And we're doing something different where we are trying to combine, apply quant principles to venture capital by taking data and algorithms and trying to make venture capital investments using that as opposed to the traditional VC approach.
My name is Kitu Kaluri, IIT Madras, 1986. I am the founder and managing director of Neotribe Ventures, which we just recently launched. I was at NEA, New Enterprise Associates, as a general partner for the last 11 years, been a serial entrepreneur, and I focus primarily on early stage sort of deep tech investments. And I do more of the traditional venture capital that, but I leverage Anand and his talents shamelessly.
I'm Aparna Channapragada, IIT Madras, 97. I work at Google. I'm a product director there. Worked on a few different products, search, YouTube, Google Assistant, etc. But in my current role, I work to look at what are the upcoming themes and what product areas should we be investing in.
Fantastic. So, we have a good mix of venture investors as well as, corporates on the panel. So maybe, Naren, I'll kick it off with you. So, what are maybe 1 or 2 areas that you are really excited about investing in over the next 3 to 5 years? And if you could touch on why, that would be really important.
Well, I have to say that, we learned from our entrepreneurs what the good areas to invest really in are. And I'm always surprised by how much the entrepreneurs know compared to what we know about what is really happening in the real world. If you look at I can maybe talk about the last 1 year, and hopefully some of it applies to the next couple of years as well. I think what you are seeing at a very high level is the transformation of traditional industries by the use of technology and in particular data. And I think the industry that I see is one of the largest industries, healthcare. And one can argue that healthcare decisions are always driven by experience, and you can call experience data, but in a more formal way, how healthcare will transform. Other thing I would sort of talk about is everybody talks about public cloud. I'm maybe a bit of an anti-public cloud person, or maybe public cloud is probably at its peak, and a lot more computing will move to the edge and potentially to hybrid environments for a variety of reasons. So maybe I would say, maybe a contrarian that everything will become public cloud. I would say that, a smart car is really computing at the edge. You can't send information to the cloud to figure out whether you should make a turn or not. And more as AI or intelligence becomes sort of a omnipresent, computing will move to the edge. So maybe it's just at some high level, but it applies across the board, how technology is changing traditional industries. And I think that what you talk about, Kitu, to me, it's going to be not just about building SaaS websites. Anybody can build a SaaS application. It's about using of deep technology to transform traditional industries. So I think that's kind of where we see what we have seen in the last 1 year, last 18 months, interesting investments. And I suspect some of this will continue, at least in the near future.
That's great. Anand, you want to take that same question?
Sure. So I'm going to answer this question in two parts. One is, clearly, since we are data-driven, what Naren said applies to us in spades, right? So we see what's going on in the world and where people are innovating, and sort of and let that drive more of our investments more than our own thesis, right? So there is a few areas that I see a lot of innovation that I'm also excited about. One is what I'll call broadly intelligent applications, right? Applications that use broadly data and algorithms. You can call it machine learning or artificial intelligence if you want, to optimize and disrupt industries. In some cases, they optimize. In some cases, they disrupt established industries. So that's one area that I'm very super excited about. And in particular, overlapping with this, there are a couple of areas. Clearly, this idea of intelligent applications, is a very broad one. It sort of applies to pretty much every functional area and every industry, and I'm super excited by all of those. But in particular, one area that, especially outside the US, I'm seeing a lot of activity happening through the lens of data and rocket ship is around fintech. That seems to be super exciting. Largely because many parts outside the U.S., there's not enough data to make credit decisions on, right? And there's lots of interesting churn and innovation happening around how to do credit decisions based on all kinds of alternate data sources. And in particular, one thing I've noticed is it's very interesting to follow the smartphone in this interesting manner, right? If you look at big companies, whether outside the US, there's been a lot of interesting business models about how to get smartphones into the hands of people, right? Whether it's like Flipkart in India, which a lot of the sales happen because of smartphones to tier 2 cities, but also if you look at in Brazil, we have a company called Trocofone, which is about reselling used smartphones, right? Because it's too expensive to buy new phones. And in Indonesia, we see an interesting company that's coming up with an installment plan for getting smartphones into the hands of people using different kind of credit models. So those kinds of things are super interesting to me. And the third area that I find interesting is around genetics and genomics and applying data and algorithms to that. The cost of gene sequencing and genomics is sort of plummeting precipitously, right? And so there's a lot more genomic data becoming available. It's one of my maxims in life has always been to follow the data. Wherever there's more data being created, there are going to be interesting companies.
Mm-hmm. I'd love to hear some of the areas that you are investing in, but also if you wouldn't mind contrasting, like you were at NEA, and now you're at New Tribe, started New Tribe. Like there must have been some, macro trends that really interested you to go and start a very early stage venture firm. So if you could even touch on some of those things, your motivation behind that would be great.
Yeah. So I'll first talk a little bit about the trend stuff that Naren and Anand touched upon, and some of it is, I don't want to make it repetitive. I resonate with a lot of what they're saying. If you look at my work at NEA and even at Neo Tribe, although we're still at an early stage here, it has been at the cross-section of two or more industries. So for instance, I invested a lot in insurance tech. I was probably one of the first investors in insurance tech, starting with weather insurance and then automobile insurance, and then more recently cyber risk. So that's been interesting. It's sort of it falls under the fintech area, but it's a little broader than that. And I think, as Naren touched upon, there are a lot of old economy industries that are ripe for disruption. There's a lot of data. But when you talk about data, there's actually, how do you use unstructured data to disrupt those industries? I have an investment in actually an Indian company that is using just your digital footprint on your phone to score your risk, your credit risk, which I thought was a very interesting way of doing it, as opposed to just collecting, structured information as to where you work and what's your salary and things like that, and how much is your debt. Another kind of area that I like, that I've more recently been involved in, is automobile technology. I invested in a company that is in the automobile space. It builds an active suspension. It's a software-controlled active suspension, which I thought was very interesting. It smoothens out your ride. It actually started off as a clean tech company, but I guess one man's clean energy is another man's comfort. So that was what was interesting about that company. But coming to the question, I guess one last comment I'll make is that, I'm a big believer in the whole data science and AI part of it, but I find that a lot of young companies are basically taking off-the-shelf technology, Google TensorFlow, and applying it to something where the data is not proprietary, or your algorithms are not proprietary, so doesn't quite qualify as, because the barrier to entry is not high enough, right? And so that's something that I'm reluctant to invest in those kinds of companies. However, Anand and I are actually looking at a company together that has done something very unique and very innovative in the whole deep learning space that I think is a breakthrough of sorts. So those kinds of companies we sort of gravitate towards. Now, coming to your question about how has venture as an industry changed, if you look at the last, I'd say, 10, 15 years, there's been a huge influx of capital, and with the drop in interest rates, what has happened is that there's been a huge influx of capital that's coming to venture, but historically, venture has been more early stage, but basically it's growth equity and sometimes even private equity masquerading as venture, which really it is not. And you find that a lot of firms are raising larger and larger and larger funds. I mean, for all practical purposes, some of our larger firms have become fund of funds. They are, they're the fund of the 21st century fund of funds, and they're kind of putting the traditional fund of funds sort of out of business. But what happens is that when you have that amount of capital, all that capital is not going into the early stage. Right. And if you think about it, historically, the returns have really come from the early stage. Right? It's if you're looking at, even on a risk-adjusted basis, it's the 5x's, 10x's have really come from the early stage, have not come from growth equity. And yet there's a certain class of limited partner out there that is quite comfortable with saying, okay, even if I get a 2x and an 8% IRR, that's fine for me, because at least I'm getting, that's better than the public stock market. Yep. Now, if the interest rates rise and the stock market starts to perform better, we don't know how that's going to impact venture. So that's what led me to doing what I'm doing.
That's helpful. Thank you. I want to ask you the same question, what areas you are interested in, particularly with your Google hat on. But just to put you on the spot a little bit, Naren is anti-cloud. How do you feel from GCP perspective?
I actually think it's and not or, because I do think there's a public cloud. There's enough of this just migration of the on-premise to a public cloud. But I do think the on-device edge intelligence is a big trend that we can't avoid, both for privacy, latency, all sorts of reasons.
Yeah, I agree. I mean, I meant relative to the team out there, over-indulgence in public.
I was hoping you guys would.
It needs to be both.
Yeah. Sorry.
Violently agreeing.
I tried.
Yes.
But yeah, at Google, what are some of the areas that you guys are interested in, invested in, whatever you can share.
So I feel this expectation that I'm supposed to say AI, but I'm not going to say it. But I actually think maybe it's because of the product development hat. I think of less about themes, but intersections, right, the joins. So a lot of the interesting products happen at the joins of a few different shifts or a few different like discontinuous things, right? Let me give you an old school example. Actually, if you take Google search, it's the combination of obviously a 10x tech, but also combined with an explosion of content on the web, that combined with Moore's law and a lot of devices and laptops, et cetera. So like really concentrated product categories, for those of you thinking about new ideas, think about this intersection of these two or three shifts. Or a more recent example would be like Uber, right? Location, everybody is on the go, then you have these fractional employment. Combine that, you can get an Uber. So wearing that lens, in that vein, there are a couple of intersections from Google that are interesting. One is speech recognition plus ridiculously cheap hardware plus this edge intelligence, right? You start to see this with things like Google Home or Amazon Echo. But I think like drop that even more nonlinear and you'll start to see very interesting things happen there. That's one. The other vein that I'm personally quite excited about is, again, take vision, computer vision, plus, again, hardware sensors on the phone, and very, very micro-local mapping around the world, right? So today you think about maps and navigation is from here to, I don't know, Fremont, right? But like mapping can be just from here to the other room and so on, or to the restroom or whatever, right? The last one on the enterprise side from Google Cloud side, same thing, right? NLP is not getting as much of a step function jump as speech and vision, but it's getting better. So you take natural language understanding, combine it with something like a productivity need, right? So things like, can you summarize all of the sales documentation and make that much better and so on.
Got it. So, I think one thing that all of you guys said was, and I think Anand, you captured it better, like follow the data, right? So data is IP, and I know Naren, you have written about it, like data is your new IP. So one question, kind of, I'll throw it out, for anyone to answer is, when you have a new startup, how do you get data? Because most of the data today, someone like Aparna is sitting on, right? Or Facebook, sorry. So how do you think about that as a new startup? Are there certain things you can do as you are thinking of starting companies where you don't own the data to begin with? So anyone wants to take that? I don't know, Naren, you want to?
Yeah, I think that is the big challenge with startups is, and I believe that, well, TensorFlow and algorithms are important. I believe data is really going to drive everything. And one can argue that if you have enough data and every case pre-analyzed, you don't even need any algorithms in the extreme. So it's going to be a learn as you go kind of a thing, build as you go, do smaller things, and then use them to do bigger things. One thing that I think Anand alluded to was that we are now creating very, very large sources of data. Cell phones, if you look at, it tracks all your communication, it knows your contacts, it knows your location all throughout the day. So you can, depending on the kind of data you need, you can collect a lot of data very quickly. Other thing I'll say is that people don't recognize that there's a lot of public data out there. It's not clean. One of our companies distribute several million data sets. They're all from public sources, but cleansing and so on is required. And I think the companies are going to come up even more so, that provide this data, at least certain parts of data to the. The second thing I would say is that, one thing that we are seeing happening is that the startups can't just be providers of technology. They got to do the whole thing. If you look at financial services, in the old days, we might have thought about our startup funding, helping a bank make better credit decisions. Now we want to effectively be the lender, or at least be a key part of the decision making and even providing capital. So I think that changes the equation in terms of data, because not just you make a decision at the time, you also follow through with the customer through the life journey of the customer. And then hopefully you can collect even better data. The one thing I think, I say that the problem is even more acute in growing economies. If you look at India, there are many fewer people who are employed in the organized sector. So very few people have W-2 equivalent pay stubs. And data becomes even more important, but also gives you opportunity to collect a lot more data. about those people that can be valued, can be used in making decisions. So data is I would say the biggest, maybe, or at least one of the biggest hindrance to starting companies in the AI space.
So just following up on one thing, right? In the past, right? If you go back in the past, the big companies, before the web, right? It was all about each company had data in its silo and it was kind of mining it, and data was kind of oil and stuff like that, right? And then you had the web come along, and then there was a lot of public data available, and you had companies like Google come up that essentially leverage public data, right? And there are lots of companies that did that. Google is the most spectacular example, and and then we are sort of moving now into, the last several years, it's always been about combining public and private data in interesting ways. And one of the interesting things that many people don't realize is two things. One is you need just a small amount of private data to leverage a large amount of public data. Right, so you just need, and sometimes you can even generate this data yourself by, maybe by driving around a car or something. I don't know, but you can generate data yourself, right? I mean, Uber didn't have data when they started out. Now they have data, right? So now they have private. They only had public data when they started out. Then they added their own, private data, and now they have a huge data set, right? So, you start with a small amount of private data, leverage a large amount of public data, but build in processes that generate more data as your usage grows, and then that's kind of how how you get that virtuous cycle rolling for all startups. And the second interesting point that I think it's sort of following up on what Naren was suggesting also, it's about the data, but it's also how you use the data, right? I think one of the very interesting things about data and sort of using data to drive build applications is sort of sometimes you can use that to optimize an existing industry, but sometimes the only way to really take this to its full potential is to disrupt the whole industry, right? So, and it's very important for a founding team to sort of think through this very important question: do I want to use data and algorithms to optimize existing industries, or do I want to disrupt an existing industry? And that's, I think, the big decision that people have to make, right?
So if I may offer a comment on this, I've invested, to give you the example of the insurance tech companies I invested in, virtually all of them actually started off with public data. Like Climate Corporation started with public data. Metromile actually started with someone else's data. In the auto insurance space, if you are an insurance carrier, you're required to actually publish your data, your actuarial model, with the insurance commissioner. And so, as a new entrant, we're like, great, progressive, thank you very much. We'll take your actuarial model and use that. Now, here is what I fundamentally believe. It is the two types of advantages you can create. One is a comparative advantage, and another is a competitive advantage. A comparative advantage is time-bound. A competitive advantage has much more of a sustainable advantage. Like, for instance, when someone says, oh, I am outsourcing my development to India, that's a comparative advantage because someone else can do it. You may have a first-mover advantage. Right. But in that context, technology becomes somewhat of a comparative advantage because there's enough smart people who can replicate what you've done. A business model disruption becomes more of a competitive advantage, and I think that's what sort of Anand was alluding to. Like, one of the things that Climate Corporation did was, in the whole weather insurance space, they parameterized the whole insurance space, right? And by doing that, they hollowed, what I like to call, hollowed out the middle. They said, we'll only do, there's none of the underwriting, claims processing. We'll just do customer acquisition and pricing, and everything else is automated. Right. Same thing with Metromile. So I'm giving you that as an example because over a period of time, both of these companies have built up their own proprietary data because they're getting, like a Metromile is getting through the telematic device, right, the data, and then you're sitting on your own customer data. So it is not absolutely essential that you have to start off with some proprietary data, although that would help. Another good suggestion I'd make is go after an industry or a market that you are the first guy no one else is looking at and try to solve that problem.
Absolutely.
For the record, even Google has that problem. Just to give a very specific example of this, bootstrapping is a real problem, right? So to Anand's point, oftentimes, so to give you a specific example, right? In Maps, Google Maps, you wanted to show a feature that says, hey, these are the frequent places, recent places you visited, because chances are you might want to go there again. But then you need the location history, right? So what we found in practice is that if you are trying to bootstrap in your startup, the data aspect, definitely lead with a user benefit. That makes it that much easier to kind of say, okay, this is why you need the location history, because we want to tell you where you've been. Right.
So in terms of areas that you guys are looking at, obviously you mentioned data, AI, edge computing, or edge intelligence, a number of things. I'm curious, like, if any of you are looking at things that are more, I would say, even more futuristic, like drones, anything in space technology, anything in quantum computing. Is that something on your radar? Do you think the market is like maybe 5 to 7 years out? That's why you are not looking at it. I'd love to hear your thoughts. Maybe like, I don't know, Narayan, you might want to start.
Yeah, we looked at a lot of drone companies, and I think the question always comes down to is what's the killer use case, what is the unique use case.
Sure.
And I think in developing countries, there are a lot of use cases. The problem is they are not really broad enough, and they are not sort of continuous use cases. One company we looked at was going to supply medications in remote areas. Well, can you really build a venture-funded company in that space? It's very important, obviously, for mankind, because a lot of the areas in India and all that are not reachable by road. But I think that's kind of the question that comes up is there really a compelling, let's call it a compelling use case. One thing I was going to say about data also is that actually there's a lot of data out there, but it's all locked up in private vaults, I would say. Verizon, broadband providers, they know every website you go to. I mean, they obviously direct the traffic. So I think one of the things startups are doing is knocking on these doors. Is Allstate or is State Farm willing to share their insurance data with you? That data is a very specific and very, very valuable. So I think lot is possible in that space. I think to me the new technologies comes down to is compelling use case. Now there are basic technology we are talking about, quantum computing. I have to say I don't understand it well enough, and I try to, everybody who comes and talks with me, try to understand how it can be used. And if I don't understand it, I don't want to invest in it. The way I would put it.
So may I ask about drones? I view drones as a means to an end. They're actually a scalable way of collecting data, right? Sure. So I look at it as that. And now you have to solve for a certain set of problems, because when you put things up in the air, they could fall and hurt someone. So you have to adhere to FAA regulations and things like that. But I view drones as a means to an end. And another area that is kind of interesting to me is in the whole polymer space. Synthetic polymers, and using that to create new materials or materials and new properties and things like that. That's an area that I think is a little sort of hotcake.
Got it. So, in the interest of time, let me ask the other question, which is like areas that you are staying away from. Maybe, I don't know, Aparna, you want to take that first? Like you think, either you're staying away from, or alternatively areas that others are staying away from, and you think are really interesting from a contrarian standpoint.
I think it's not so much staying away from, but I think there's a maturation or the timing issue on robotics. So I feel like there's building blocks like speech and vision and to an extent natural language that you're starting to see some of these things have this step function jump. Robotics isn't quite there yet. So I think that you'll see a lot of experimentation in terms of like this old approach of control systems combined with this deep learning and machine learning based approaches, and not quite land in the right place. The other problem with that would be like what I call the idiot genius problem. You already have that with the Google Home and the Echo kind of, these smart assistants, right? Where they know exceedingly deep information about one topic, everything about Warriors and everything about NBA. And then you turn aside and say, where can you buy a basketball hoop? And you're stumped, right? Because you have this brittleness.
Yeah.
From my point of view, I stay away from things that are not solving a hard enough problem. Because given the stage that I like to invest in, it's hard for me to bet on someone who's building a app to walk a virtual pet on the internet. I don't know whether that will succeed or not.
Yep.
But an area that I do invest in the enterprise infrastructure, so talking about a contrarian theme, one of the things that I've been fascinated about is in these high-density compute architectures, pod architectures, where essentially you got these hyperconverged infrastructure with compute, storage, and network all coming together. But basically, one of the things that is kind of very intriguing to me is how PCIe could be replacing Ethernet in the data center. And so that's sort of an interesting
contrarian.
Okay.
You guys want to touch on this quickly?
So I don't know whether this is an investment thesis or not, but I'm generally a skeptic on robots taking over the world, right? So the fact that yes, I think Skynet is a little bit further away than we think.
Cooking, I was counting on laundry and cooking.
Yeah, so there you go. I think Skynet is a little bit further away than we think. The reason is I think somewhat what Aparna touched on. I think if you think of all these things such as machine learning and deep learning, everything that we think about out there in the world that everybody is so excited about, they all work, but they all work in a statistical sense, right? So which means that they are right 99% of the time or whatever, but they are wrong 1% of the time. And when you have systems like that, it's very hard to use them in fully autonomous kind of settings. So in general, I'm very skeptical about completely autonomous use cases for AI and deep learning type technologies, right? I think at the moment we still need to think about how best to create workflows that leverage these technologies, but deal with that 1% case.
Got it. Naren, any last word before we
I was going to say, maybe I'll say quickly 4 things. I think people need to stop fighting yesterday's wars. A lot of the companies start, problems that have largely been solved. There's no point trying to make an incremental change. Second thing I would say is, don't be the 10th company in a space. I don't care what the space is, but third thing is, I think you talked about Kitu and you talk about, and then you talk about, don't do easy things, putting a new SaaS front end to a technology. I don't think it's really. And the fourth thing I would say I would not fund. I don't care how good the area is if the entrepreneur is not, enthusiastic, full of energy, bouncing off the wall. I think to me that's probably the most important thing.
Absolutely.
I don't even care about the area if I meet a great entrepreneur. People don't change, the business focus changes.
It's an excellent point. So we're running out of time. So at this point, we'll open up for the audience to ask questions. So Shikhar has a mic. Yeah, please use it.
Hi, I'm Raj from IIT Bombay, class of 2001. I was hoping to hear a little bit about blockchains. Personally, I'm very interested in it, and I've been working on it for the last couple of years. So any thoughts from the panelists, that'll be good.
Anyone wants to take that?
Yeah, I mean, I'm happy to take it. There's blockchain as a mechanism, and I'm a big believer in that as a mechanism to sort of essentially eliminate a lot of the middlemen in the authorization and authentication process. And I think using that as a mechanism, as an infrastructure to enable different types of transactions is something that I'm very intrigued by. Insofar as it pertains to currencies, cryptocurrencies, I think there are so many other newer and newer cryptocurrencies that are coming about. I view a cryptocurrency as essentially a marketplace. Like it opens up a new type of marketplace. So, and anytime there is buyers and sellers in a particular marketplace that adopts a particular cryptocurrency that takes off, but now you got a new market. You start off with you can just as easily start off with a new cryptocurrency, right? And so that's kind of how I look at the cryptocurrencies. But blockchain, I view it as more of a mechanism and an infrastructure.
All right. Next.
Hi. I'm Abhijit Mehta, and full disclosure, I work at Google too. And one question I had is, as a fledgling entrepreneur, if you have an idea, there are a couple different directions you can take. You can work at a place like Google and try to launch your idea there, and then you have the advantages of infrastructure, both technology and product and business and HR and everything. Or you can try to, at nights and weekends, or quit your day job, go it alone, look for VC funding, and really try to do your own thing, where I guess you have a lot more freedom and flexibility, but you also have a lot, you have to do a lot more things. And I was curious as to your thoughts about discerning between those two approaches and figuring out when one is right, when the other is right.
Aparna, go for it.
I think I'll probably have the only odd one out perspective, because obviously the VCs would say you should go it alone.
And
no, I don't.
Okay.
I should add former
Why don't you go ahead and
that's
tell you?
right.
I'll offer
I think I would say that if you can learn on Google's time, please do. So there's no reason not to.
So basically, learn on Google's time and then come for funding to us when you want to start the company. I think that's right.
I would say, in places like Google and Microsoft, they provide tremendously good environment. I recommend everybody should, not start a company out of school. Certainly in the enterprise technology area, you should always learn on your, but make a contribution to that company. Don't be there to, simply learn. But
Yes.
I think
the
the way you learn is by making great contributions.
But
be out there and change Google, and then you start a company of your own. Why wouldn't you do that? Google wants you to learn on their dime, and you can make a contribution there.
But I think, you have to look at a few parameters. For example, I think if your idea is roughly directionally in the same theme as the business, that's the best way to kind of look at it. But if it's off the dimensions that the company is good at, right, this will be a problem. Let's say you're at Google and you're trying to do the next, fun rainbow vomit filter app, right? May not be the right place to do it. We don't do fun.
I thought you do 20% of the time, right? No. But I have a slightly different view on this. I actually think that there is value in alternating between being a small fish in a big pond and a big fish in a small pond. And in my career, I've had the good fortune of sometimes accidentally and sometimes deliberately alternating between them. And the kind of learning you get from being a small fish in a big pond is different from the kind of learning you get from being in a big fish in a small pond. And here I am today doing a startup for all practical purposes, but I've benefited from having been part of a large platform like an NEA. Similarly, Silicon Graphics helped me a great deal. Juniper Networks helped me a great deal. And interspersed between them were two other startups that I helped co-found. So I think there's learnings, different types of learnings.
So yeah, I'll echo what Kitu was saying. I've had similar experiences. Every time my startup gets acquired by a company, I spend time at that company, and it's sort of relaxing, and you also learn new things and make new connections. So there's definitely value to that. But I think what happens is actually this is if you're the kind of person who likes to optimize existing processes, I think it's best to do so within the context of a large company. If you want to disrupt industries, I think you ought to do it on your own, because large companies are bad places to build disruptive technologies. Yeah. This is my.
I agree with that. I agree with that.
Right.
Next one.
Yeah, hi. I was just wondering where you think the space of big data, IoT, and cloud is heading, because someone who's new to all three but has heard all these buzzwords, what guidance you can give? Is it yesterday's war, or how we can make provide value and make money in this area?
Solve a real problem.
Like pick real use cases,
Right.
To begin with.
You're asking the wrong people, because we are reactive. So, like Naren said, we're hoping you'll come up with a bright idea.
Right. So we can recognize it when you come here, right? So we can't.
We're very good at that wide aperture, looking at a bunch of things and saying, okay, this is it. But if you're asking us to come up with a thing, we'd be doing it by now.
That's actually an excellent point. I think a lot of venture investors try to stay away from being very rigorously attached to a thesis, because if we do that, we'll be looking at incremental solutions, and we'll miss the outliers. The outliers always come from the entrepreneurs like yourselves.
It's a good way to put it, Sudeep. Yeah. We are looking for outliers, and they come from you, not from us.
Yeah.
Hi, my name is Sachin Gupta. I'm from IIT Kharagpur. So I will take the discussion back to blockchain. So what I'm looking for is what are the investment opportunities in that technology, right? I understand that there are some cryptocurrencies and there are things over there, but some new applications are also coming up in that space using blockchain. So what's your take on that in the next 5 or 10 years?
I think we're back to the same thing. You need to come with a compelling use case.
Right.
We don't know. We hear all kinds of things. Technologies are valuable, but they are basically foundations for building a big building. I mean, it's a foundation you can build things on. We don't know what,
I mean, I'll give you an
can
example.
imagine all kind of stuff, but,
I'll give you an example of a company that I saw which used, I thought, blockchain effectively. It was basically trying to streamline supply chain process for global shipments, and I thought that was an interesting, innovative application of blockchain.
Okay, so there is some future in that. I mean, because it's something new technology, maybe the use cases are still coming up.
Yeah, I mean, one place I avoided deliberately was this whole investing in the whole Bitcoin cryptocurrency, because there is such a vast discrepancy between supply and demand that you just cannot build a real marketplace there.
Okay, well, thank you.
Thank you very much for your questions.
Thank you, Sudeep, and the team for this wonderful and very informative panel. So we have some memento for you. So with Sudeep.
Thank you.
Thank you.